Welcome back to another episode of Sky's the Limit Podcast. I'm your host, Mike Doherty, and today we have an awesome guest, Ryan Wittig from Kinvarra Capital, which is based in the greater Boston area. Ryan at Kinvarra does development. He's done fix and flips, and he actually left his corporate job in 2021 to pursue real estate full time. So can definitely empathize with that. Before that, Ryan worked in sales for 17 years, and his first deal in real estate was in 2006. So with that, Ryan, welcome. Thank you for coming on the podcast.
Thank you very much, Mike. Appreciate being here.
So I always like to ask a lot of our guests, for the listeners, when you were working in tech, is there anything that, during your 17 years, is there anything that kind of prompted you to want to start pursuing real estate or even, taking a look at it? Like what was that aha moment?
Sure. Well, I mean, it started from making more money than I could, you know, save or put in my 401k. So I had some extra disposable income that I was looking to reinvest somehow. That was number one. And then number two, beyond that, well, when I first got started was in 2006. So I kind of started studying outside of work ways to invest outside the stock market. And obviously was intrigued by real estate, wanted to figure out how to get in that game. And that's, things were starting to smell a little fishy in 2006. So I was looking for opportunities. And that's generally how it started. And then in 2008, 2009, I made a lot of money for what was then a 28-year-old corporate employee, made over $300,000. But I also saw almost half my paycheck go to, various government entities. And I hated that. And I said, I've got to put an end to this and find ways to keep more of my hard earned cash. So those were kind of the two things, having disposable income that needed to be invested outside of my 401k and also being highly taxed as a high income W-2 income earner.
Yeah, I mean that's a big jump to go from a very good salary or at least part 1099 income to eating what you kill. What was did you start building up your rental portfolio or doing a development deal or two while still working in that tech job?
Yeah, so I was in outside sales. So we did have an office that we went into for meetings and generally just to go in to do work every day. But I started and ended my day generally at home. So I had a lot of autonomy to carve out my own schedule. So I started doing development in 2015 while I was still very much a full time employee, and kind of had autonomy to create my own schedule. So I started, like I said, doing development in 2015. Had a couple successes in the first few deals that we did, and then it kind of snowballed from there. So really, I was having a W-2 job from 2015 to 2021, working really two jobs at the same time. So yeah, so when I left in 2021, it's just we had a lot going on in our real estate business to where I had to make the choice where I was going to put my efforts and focus my time. So and the job was starting to get a little tired of me having to split focuses as well. So I had to choose, and at the time it was an easy choice to go all in on real estate because that's where I saw my future going.
Yeah, no, amazing. Congrats on all your success. Where did you go to school in Boston?
I went to Boston University, so yeah,
Okay.
I've always been
Yep,
kind
heard
of
of
right
it.
in the city.
Very good. And you still live in the Boston area now, I assume?
Yes, yeah, I lived when I graduated from BU. I lived in Boston, Cambridge, Somerville, all around in those immediate areas. Our office is in Somerville now, but we have 6-year-old twins now, and when we found out we were having twins, we decided to move closer to my in-laws who live on the North Shore. So we live in a town called Swampscott, which is
Okay.
about 25-30 minutes north of Boston on the water.
Amazing. Awesome. So what kind of development deals are you doing? Are you mainly focused on residential, multifamily? commercial development? Or are you doing smaller 2 to 4 units? Or are you doing mixed use? Where are you seeing the value in the market right now?
Sure. So we do a couple different things. So I would say we earn our active income in residential real estate development, and then we take our earnings from those projects and invest them into commercial cash flowing properties. So we, on the development side, we build anything from 2 townhouses up to 10 units is kind of what we've done so far. We've permitted some larger units. We permitted a 32 unit condo project in Somerville near the Union Square neighborhood. And we ended up selling that off to another investor who's building it right now. And I guess they've already sold half the building, which, and they sold half of it before it was even out of the ground. So that was kind of, we're wishing we may not have sold that thing at this point, but we made some money on it. They're still making some money on it. So everybody's happy.
Good.
We're also permitting some larger deals right now. We have another 35 unit condo project in the same neighborhood, Union Square, Somerville. And yeah, we've permitted a 20 unit mixed use in Salem, Massachusetts, downtown Salem. We just got some tax credits for that from the state for market rate housing development, if you can believe it. So we're getting ready to get that out of the ground soon, and we're looking for a construction partner on that. So yeah, we generally build anything from 2 to 10 units, but we've also permitted things from 20 to 35 units.
Amazing. Awesome. That's really cool. What kind of financing, what does the financing look like for these ground up developments? Are you, what kind of banks are you working with? What down payment are they looking for? And what kind of rates are you generally seeing?
Sure. Yeah. Generally, we're working with local community banks, and we've worked with a lot over time. We've had some good banking relationships, and that's the one thing about having those banking relationships is it's good while they last. But a lot of times we find that banks' development appetites change. We've had several banks where we've had good relationships where they've ended up getting acquired with other banks who weren't so keen on development, or they're just bigger banks altogether, and so they went from a you know small to medium sized community bank to being gobbled up by a big player who just wouldn't be interested in the type of thing we do anymore. So we still have some of those local community bank relationships that we still call on and still use, but we're also using more commercial debt brokers, not like your traditional mortgage brokers who would be for home buyers, but these guys specialize in going out to 30 to 50 local and regional banks, getting term sheets and finding out who the best option is. So we're working with those guys a good amount of the time. Generally, what we're seeing from rates and terms are, in general, 75% of the acquisition price and usually 100% of the construction. And the rates are usually prime plus one. Sometimes we're getting around prime. So right now, a lot of the stuff we have for construction is around 7%, give or take,
That's amazing.
which is pretty
Wow.
good. Yeah, and that
Yeah.
I have to say that comes from the power of the mortgage brokers, because they're going out
Right.
and finding the hungriest banks out there and getting the best rates and terms.
And are there any points with that they're charging
Yeah,
you?
usually the originating bank will be like a half a point, and then
Mhm.
the debt broker will be 1 point.
Right.
So,
Yeah. Yeah, but still, I mean, if you're getting prime or just over prime, that's amazing. Especially because I mean, think about, and obviously that comes with a track record. Not, I think if someone was to do their first development deal, I don't think they would probably get those terms and rates. So it does come from track record, history, relationships with banks, relationships with mortgage brokers that they can vouch for you. So I think for a lot of the listeners, if you don't expect it for your first development, don't expect to get those rates and terms, but you got to cut your teeth somewhere. And even if it's prime plus three, just to get your foot in the door, start the relationship, and then you can work your way up. It's just the same thing. I'm with Skytree Investments, and you know my first flip rates and terms look completely different than what my rates and terms are now. So I'm also an active agent. So when I tell my clients, this is generally what you're seeing, because they always ask like, what do you, just like I asked you, what are your rates and terms? And it's like my rates and terms are going to be a little different if you have no experience. So But you got to start somewhere, and I think that's the point of this podcast is to kind of inspire. So really appreciate you sharing that. What are you seeing? I have two questions. What are you seeing in the market going forward? Are you still like development? Obviously, you have active deals. So I generally curious what you see in the Boston area. If you see maybe office coming back at all, or if you like the industrial sector, self storage. And then two, have you ever thought about buying existing multifamily apartment buildings and converting them to condo status, and then selling each condo off? I met actually at the airport at Bradley in Hartford. I met an investor in Boston who was doing just that and seemed to be pretty successful at it. So, curious your thoughts on that.
Sure, you might have to break a few of those things down for me into smaller, bite-sized chunks. But I guess I'll start with what we like right now and what we're still doing. Yeah, we're still very actively involved in the residential development. However, there's been some things change recently. One of our favorite markets, Cambridge, Massachusetts, where Harvard and MIT are, they just had massive redo of their zoning laws, and it's going to allow for better or for worse. I think it's a good thing for Massachusetts and for Cambridge, but they are doing a massive overhaul of the zoning, which is going to allow for a massive increase in the supply of both apartments and condos. So we have a few projects on the market right now that are going to be sold off this year. And then beyond that, we don't have any other immediate development plans for Cambridge. I'm sure we'll still try to do one or two for 2026, 2027. But we're pulling back a little bit because I see in 2026 and 2027 particularly, there's going to be a substantial increase. I think there's going to be hundreds upon hundreds, like I would say somewhere between 500 to 1,000 apartments and condo units coming on in 2027. So we don't really want to be flooded out with that. So we're kind of looking at some of the other suburbs that we're also interested in, the nicer gentrifying suburbs and the nicer parts of Boston, but not the nicest parts. So we're not in Back Bay or the South End or the Seaport, obviously, where the cake's already fully baked, so to speak. We're just looking to pick off some of those still up and coming areas where you can find reasonably priced properties with upside between construction and acquisition to still have a good sellout. So we're still doing that. But at the same time, like I said, we usually take our active income from development and put it into commercial cash flowing properties. We've got an industrial warehouse in Worcester that we've owned for about 3 years now. That's doing really well for us. We're making mid-teens cash on cash returns at this point, and we plan on holding it for a really long time. So we're just looking for more deals like that. We have a retail strip center in Weymouth, Mass. Currently under contract. We're supposed to be closing on that in the next month or so, and it's a pretty big value add project for us that we're really bullish about. So we really like industrial and retail. Just based on our experience, we'll still continue to do residential development. And back to your question about apartment condo conversions. Actually, we have done that in the past on a small scale, taken like duplexes and triplexes and doing condo conversions on those. And we've done okay on those a few times. We've also lost money and broken even a few times. So I would say for us, not super heavy on that, just because doing the condo conversion thing, it's kind of like flipping. Really, it's just a cosmetic generally, but there's a lot of surprises that come along with those cosmetic things that we just have found not to be the best. And like I said, we've made a little money here and there doing the condo conversions from apartment buildings to condos. We've also broken even a few times, and we've lost money a few times, and we don't want to lose money anymore, so we're not doing that.
It's not the goal, right?
Yeah.
So correct me if I'm wrong. You're primarily doing ground up development deals, residential ground up development deals, as your main active income. So you're developing it and then you're selling them off, taking the profits, and then going investing in other asset classes. You're not, generally speaking, keeping those development deals and refinancing them out. You're selling them off once completed, right? And then taking those profits and going to buy more buy and hold assets in a different sector, industrial, for example.
Exactly. Yes. Yeah.
Interesting. Okay.
Yeah.
Yeah.
We did have a project recently under contract. It was in Cambridge, actually, a product of the new zoning, where previously it would have been like three townhouses or four large townhouses, or it could have been uh, three triple deckers. But with the new zoning, it would have allowed for 65 to 66 most would have been better suited for apartments, and we were looking at doing that. We got pretty far down the rabbit hole, and that would have been a build to hold. But the construction component of it was just too unpredictable for us to feel comfortable diving in on it. So we pulled the plug on it. But that would have been our first build to rent project.
Interesting. Have you ever thought about going outside of Boston for development or buy and hold rentals?
Sure, of course, of course. You know, obviously, well, I should say I have I have gone outside of Boston personally. I invested a Gulfport, Mississippi, a long time ago. Like after Hurricane Katrina, I bought a duplex because they had some tax incentives to do that right after Hurricane Katrina. uh, I just sold it. I think 2024. So I owned it from 2010 to 2024. And believe it or not, I sold it for less than I paid for it in 2010. So I got my principal back. I got my initial investment back, but I was losing money. It wasn't, horrible, but I was losing money year over year, and sold it for less than what I bought it for. I think I'm better at underwriting now with what I know than what I did then. But
Yeah.
I'm not opposed to it. But I just obviously we know this market. We feel comfortable with this market. I think Boston's obviously a great market. It's got a lot of
Yeah.
tailwinds. Well, it had a lot of tailwinds behind it before a lot of this college stuff started happening with the government going after colleges. That's a whole other discussion.
Yeah.
We won't get political, but I think it still has a lot of tailwinds behind it, and we'll once all this noise kind of settles down, I think it'll continue to pick back up. But
Yeah.
yeah, we know and we're familiar with Boston. Obviously, there's other markets like the Carolinas, Florida, Texas, the Sun Belt stuff where the demographics look a little bit better, but it's also I just feel like there's a lot of a lot of movement, a lot of people chasing those markets as well. So for now, we're just sticking to what we know.
Yeah, there's a really good, I don't know who said it first, but I'm a firm believer. I'm also guilty of this too, but going 100 miles deep in something versus 100 miles wide. 100 miles wide would be you're a flipper, you're a developer, you're an agent, you're dabbling in some private lending, maybe you're doing some syndications, maybe, you're just doing a bunch of different buckets of things versus doing what you know best, which is greater Boston area development, the 2 to 10 units, selling them off, and then go buying other things. You probably self manage a lot of the buildings you do. Once you start going out of state, generally speaking, you're probably going to rely on a third party property management system, which is fine. But I'm like you, I stick to Connecticut, particularly. I have so far. I've invested like privately in some deals outside, but I'm not managing them. It's simple, it's easy, it's just lending. But yeah, kind of stay in your lane, get really, really become an expert at your niche, which for you is, like I said, ground up development. And so I really think there's something to be said for that. And I've caught myself, wanting, owning the smaller multifamily and then going to larger commercial and going to mixed use. But it's like, just stick with what you know. I mean, it's, I think longevity wise, it could serve people, very well. So, um, I'll end with a couple more questions. I always like to ask all of our listeners, what does your day to day look like? So walk me through from the time you wake up. I generally like to know, like, maybe you're a morning gym guy, or maybe you take that time in the morning before your kids wake up to read some of a book, or like, what does your day to day look like from the time you wake up to the time you go to bed?
Sure. Well, like I said, I have a 6-year-old twin, so
Yeah.
um, a lot of that, fortunately, is revolves around them. So generally, I wake up around 6:30. I was starting to get into in a dream world. I'd do the Miracle Morning by Hal Elrod. I was doing that in the past, and I still do that when I can beat my kids to
What
waking up.
is that? If you don't mind me
Oh,
asking.
sure, you're not from yeah. Hal
No.
Elrod. There's a book called The Miracle Morning, and
Okay.
it's called. There's like 6 practices called savers: silence, affirmations, visualizations, exercise, reading, and scribing. Um, if you can do all 6 of those things before the day gets started, you're really you're ahead of 90%, 99% of the world. I think it's pretty ambitious. I've never done all 6 of those, but I find that there's a couple for me that are particularly beneficial. Which silence, which is meditation of some sort,
Hmm.
um, and I kind of stack silence, affirmations, visualizations. I kind of stack all 3 of those together and meditate and do affirmations and visualizations all at the same time. So if I can do those 3 things, I find that my days generally a lot more. I'm prepared to mentally deal with the day. Um, and then also in the past, I would work out before going into work. But given my business partner and our operations guy both just had kids in the past month, so it's kind of all hands on deck right now. So generally, I'm working out on the weekends, Saturday and Sunday, and usually 1 or 2 days during the week when I can.
Nice.
So whether that's before work or after work or during the day, I just try to find a way to get that in somewhere, just to be physical somewhere throughout the day. And then so going back to the beginning of the day, I drop my kids off, have quick bite to eat, and then head into the office, listen to podcasts on my way into work. That's usually an important time for me to also kind of set my mental day off right, listening to mindset things generally. Ed Milet a lot of the times, Tony Robbins, some other kind of mind, body, spirit type stuff. Um, Lewis House, I like him. So then I get into the office, and usually we'll quickly check some emails. Obviously, I'm checking emails. Try not to do it immediately when waking up, but generally the hottest stuff is usually taken care of before I get into the office. Check emails, and then throughout the day, it's pretty variable. A couple days out of the week, I go and stop in at projects and properties and get a visual check-in to see where things are at, see if things are on track, if anything needs to be reined in or addressed specifically in terms of design or construction questions. Usually, I'm at the site 2 or 3 days a week before going into the office just to check in on those things. And then we're talking to bankers, talking to investors. Um, Talking to new partners, whether it may be a trade, um, construction, operational partners on some of the um, non-residential stuff that we do. And I would say it's pretty hard to say there's no typical day. From day to day, every day is a little different. Um, Ideally, now that we're in the summertime, by Friday, hopefully we're golfing a couple times a month, maybe. But that's about it.
Awesome. Any no, no, that's awesome. Any tips, tricks for people or advice for anyone looking to get started in real estate investing that you could shed some light on now after experienced quite a bit?
Sure. I mean, for me, the biggest thing, what kind of started the whole journey off for me was I had gone to a Tony Robbins, Robert Kiyosaki. They had like I think this wealth seminar or something. Is in Boston. It was a gigantic. They was at the Boston Convention Center. They had a bunch of speakers there. Everybody was kind of giving their pitch about their program and this and that. So that's kind of that's 2006 probably is when it all started for me going to one of those events. And I, you know, saw a speaker in a program that resonated with me, and that's where I got started with my own personal education. So I would say a lot of it starts with finding a group that resonates with you. There's a lot of them that are out there for residential, commercial, non-residential development. There's a lot of different mastermind groups that are out there that can help you get educated, get around the right people. And I think that's the number one thing: is get educated, get around the right people, and then start taking action with figuring out where you can add the most value to the equation, and start getting busy.
Yeah, no, it makes complete sense. I really appreciate that. And again, congrats on all your success. Sounds like you guys are doing an amazing job. The future is bright for you. And yeah, really appreciate you coming on. Thank you to all of our listeners here at Sky's the Limit podcast. If you like what you heard, be sure to like and subscribe. And you can check us out on our YouTube channel as well, Sky's the Limit podcast. So thank you all for listening. Thank you again, Ryan. Thank you for watching Sky's the Limit. We're always releasing new real estate content, so if there's something you want to hear, be sure to leave a comment. And don't forget to subscribe to our channel.